What is up, everyone? Welcome back to my channel. Today we're going to discuss something I never thought we would have to talk about: meme stocks. Regardless of how you pronounce the word meme, there's no doubt that you've probably heard about some of the crazy things that went on in the stock market over the past few weeks. Stocks like GameStop, AMC, Bed Bath & Beyond, BlackBerry were just soaring up, and today we're going to talk about how did these stocks go up? What led to the rise of meme stocks? Before getting into the video, please hit the subscribe button below for more content like this, and let's dive right into it. Now, before we can actually look at what led to the rise of meme stocks, we need to first consider what meme stocks are. What's the definition of a meme stock? These are stocks that are hard to define, really, but if we were to think about them in the most fundamental way possible, they're stocks that are extremely volatile and their price is driven up by hype and hurting rather than the fundamentals of the actual company itself. So now that we understand the basic of what a meme stock is, it's now important to consider what led to the rise of these meme stocks and why were they all over the news over the events that happened in the past few weeks. Overall, if we were to break it down, there are two fundamental factors that really popularized meme stocks: commission-free trading and online communities. In terms of commission-free trading, there are many apps and stock brokerages that essentially allow retail investors, which is regular investors like you and me, to basically trade stocks with no fee whatsoever. Traditional brokerages for stocks usually charge a commission for each trade that occurs. These commission-free brokerages allow you to trade stocks without having to pay any commission for each transaction. This really increases the accessibility of stock markets and really allows a wider segment of the public to invest without having to worry about all these extra fees being tacked on, essentially making it easier for more people to invest and be involved in the stock market as a whole. Now, coming to the second factor, which are online communities, sites like Reddit have really made it easier to discuss stocks with a wider part of the public, allowing many people to discuss their ideas, share topics, and talk about stocks as a whole, and be able to communicate with many people almost instantaneously. Because there are so many people on these online forums and these discussion boards and just all these websites as a whole, it really makes it easier for people to discuss stocks, which can really shift the market sentiment and create hype for a lot of different stocks and assets. This hype created can really boost up the value of a stock, which, as we saw over these past few weeks, is exactly what happened through Reddit itself. Putting these two factors together, the commission-free trading and the online communities are really what led to the rise of meme stocks. These online communities really created some hype about some of these stocks, even though there weren't really any fundamentals to back up all that talk. However, the more hype that was created, it led people to go to these commission-free trading brokerages and use them to trade these stocks that had more and more hype being created. Since there's no commissions and it's all free to trade on these different brokerages, people were able to easily put their money in, invest in these stocks, and more and more people were getting involved, which created essentially a herding effect where the hype was essentially causing more and more people to put their money into the stock, which further led to the increase in the price. It essentially created a positive feedback trading loop, which was basically there was hype created, so more people put their money into the stock. More people putting their money into the stock increased the price. People saw that the price was increasing. This created more hype, so more people put their money into the stock, which further increased the price, and it became an ongoing loop, which is what a positive feedback loop essentially is. A major factor that drives these positive feedback loops is the feeling of missing out. People wanted to get into the stock, make some profits before the price increased more. Everyone wanted to, make some money off of this. They saw all these other people making money. They saw all this hype, these people that were able to make huge profits. And so more and more people wanted to get in on that, get the opportunity to make some money as well. It was an easy opportunity for people to make money, and they honestly did not want to miss out on all that opportunity. Now, this can lead to an economic concept called the greater fool theory. The greater fool theory basically says that it's possible to make money by buying overvalued stocks and then selling them at a higher price to someone who is a greater fool. So this could partly also be something that drove people into investing into the stocks, even if they may have known that the stock was overhyped and there wasn't really any fundamental value that backed up all that hype that was going on. So it could have just been people who understood this, but they knew that other people would be willing to buy it. Someone who is a greater fool would buy it from them, allowing them to make an easy profit off of it. Now, just a quick disclaimer, I'm not promoting this strategy at all. You should always do your due diligence and do your research before investing into these stocks, because a lot of the people who were investing into these stocks did not really do their research. There were some people who knew what was going on and intentionally entered it to make that quick profit, but some people truly did go into it because of the feeling of missing out. They heard all this hype and they honestly wanted to get in on it. They didn't want to feel like they missed out on an opportunity to make some good money. So always do your due diligence, do your research, and know exactly what you're investing into before actually putting your money into it. This will not only help you understand what the company is, what it stands for, and the underlying business, but it'll also help you avoid being caught up on the wrong side of the trade. So please always do your research and know what you're investing into before actually putting your money into stocks. While some of the hype has died down for the stocks that we talked about earlier, like GameStop, AMC, Bed Bath & Beyond, BlackBerry, the meme stocks hype really does still exist. It's moving on to other stocks and is even moving into cryptocurrency now. So that means that meme stocks are here to stay, at least for now. So with all this news and hype being spread around about some stocks, please remember that the increase in the price does not mean that the underlying operations of the business have changed. Always do your research and make smart investment decisions rather than simply relying on the feeling of missing out. People buying meme stocks will always need to remember that there's a lot of volatility that comes from people quickly buying in, which can cause the price to increase, but then a quick collapse with people selling out as soon as they realize that there's a lot of risk associated with their investment. So there's going to be a lot of ups and downs, and so always invest wisely. The rise in meme stocks was led in part by commission-free trading and these online communities, both of which are honestly probably here to stay. So that means meme stocks are here to stay. The rise in these meme stocks has been a crazy series of events, and there could honestly be so much more to come in the coming days, the coming weeks, and the coming months. I hope that really helped break down what led to the rise of these meme stocks, commission-free trading, and these online communities. As always, I hope you found some value in this content. Thank you so much for watching. Hit the subscribe button below, and see you in the next one.